A miss here on the net change in those streaming numbers here. And I guess if you look at the forecast, it does look a little bit light, Geetha. What here did you find encouraging?
Yeah, so for me, Romaine, I think what obviously the subscriber miss is pretty well telegraphed here. I think when I look through the report very briefly, the one thing that really jumps out to me is we have to now accept that Netflix is a slow growth story. Where we are really going to see some upside is in the profit numbers, in the free cash flow numbers. So they did take up their free cash flow guidance for this year from $3 billion to $3.5 billion. The other positive was they said they're going to accelerate their share repurchase. So already purchased about 400 million of stock in 1Q, accelerating it throughout the year. So this is really becoming a cash flow, a profitability story over the years. The subscriber numbers, I'm afraid we're going to have to contend with a lot of volatility, a lot of short-term noise before all of these different initiatives kind of play out.
Geetha, I thought there was supposed to be that balance there. The idea that, okay, well, you maybe lose some subscribers who are scared away by the password crackdown. Maybe some folks really don't embrace the ad tier. But where's that balance going to come from? Do you think that Reed Hastings can get it?
Yeah, I think they absolutely can get it. But again, we are going to have to deal with a lot of bumpiness down the road. I mean, this is, when you look at password sharing, when you look at the advertising tier, those are long-term opportunities. They just introduced the ad tier just 3 or 4 months ago. So it's kind of unrealistic to expect them to come out, all guns blazing. It is going to be a slow build. The same thing with password sharing. I mean, we knew going into this that this was going to be a double-edged sword. I mean, you are going to turn people off when you're saying that you're going to charge them $8 or $9 to add a member. So again, it's about revenue, it's about monetizing the members, it's about revenue growth, reacceleration, but it is going to take a while. And I think we have to look past that short-term noise, that bumpiness, to the longer-term story.
I find it fascinating that you said it's going to be a slow growth company, and then you brought up the fact that it is going to increase its share buybacks. I mean, that's something that a legacy tech company does, not a growth tech company. And the way that Netflix is moving forward makes it seem like an old school tech company. There are a lot of hopes that these growth initiatives that Netflix was launching, whether it's the ad tier supported subscription or the password sharing, the paid password sharing, could reaccelerate revenue growth to the double digits. Is that idea now gone?
That idea is definitely not gone, but I think obviously with their revenue guidance now for 2Q, one does kind of get a little bit skeptical about how this is all going to play out. Again, it is going to be pretty volatile, I think, over the next few weeks, over the next few quarters. But I think we can expect that uptake coming in the second half once all that dust kind of settles down, because we already got a little bit of taste from this from Canada, because they did launch it. We did see a lot of backlash initially, but then things did settle down. So I think they're expecting a very similar kind of template or a very similar blueprint for the U.S., which they're launching the password crackdown in 2Q.
Yeah.
Which is why they're kind of expecting that backlash, I think, and maybe some cancellations.
Got it. Okay. And of course, we know that the rollout of the shared, the password sharing, the paid sharing, has been taking longer than expected. And you mentioned how they've already experienced a little bit of that backlash in Canada. Does it all depend on execution in the U.S.? Can they do something differently in the U.S. market, their biggest market, their most profitable market, compared to what they did in some of those early markets like Spain, like Canada, like Portugal?
Yeah, they have to really execute, right? Just as you said, Scarlett, they have to probably time this with a big content release, right? Maybe they're going to time it with the launch of Bridgerton or with the launch of Extraction 2, so that people may not want to cancel. They are waiting to watch that piece of content. They might not want to cancel the service completely. So, they have to do this really, really in a very meticulous way, in a very measured way. It's very, very nuanced for them. But I think they've kind of understood that, it's not a one-size-fits-all. Pricing is a market-by-market basis. It has to be on a case-by-case basis. And they are kind of taking that approach. So I expect them to do that in the U.S. as well.